Hello traders, it's 8:04 a.m. Chicago time on the 9th of February 2021. It is Tuesday. Thanks for joining me on episode number 1934. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm sure you can recite that with me since you hear it every day. This morning, as we come into the session here, we're looking at the Convergent Trading pre-market summary sheet, and we can see it's a slight risk-off sentiment coming in, seeing red across the risk assets. Crude being the leader today, crude down 0.79% this morning so far. Of course, this summary sheet was done about 15 minutes ago. Things keep moving. As you know, the market's in constant motion like the ocean. The DAX down 0.43%. The dollar's off. The Euro stocks are off. The Nasdaq's off 29.25 points, 0.21%. So it's pretty mild. The 10-year note is up just 1.5 big ticks. The bonds are up 10 ticks. And then the leader today is gold, trading at $18.45 and 40 cents, up $11.50 or 0.63%. Silver at $27.72, holding steady. So that's where we stand this morning. Looking at the overnight session, we've traded 146,000 contracts so far. The overnight inventory is about 93% short. The range is again pretty tight, 15.25 points, and the market condition is overall balanced. The profile is balanced. So we are currently below the overnight point of control, below the full session mid and the full session VWAP as we speak. And so that's where that stands in terms of what's ahead. Again, take a look at a calendar. You've got the items in front of you here. In terms of what's likely to push the market around today is the Senate impeachment hearing of former President Trump. I expect that that'll have zero impact on the markets. So that's where we stand. Let's take a look at what was expected yesterday versus what we got. Yesterday, the primary scenario is a choppy open that drops into the 38.90 area, looking for an impulse up to 02 to 04. 02 to 04 was expected to shut the door for buyers early on. My throat's really dry. I think I'm losing my voice. 1 second. There we go. Expected it to push to 39.02 or 04. That was the next big area. This is a measured move area, and expected it to come off from there. So the primary expectation, pull down to 38.90, push up to 02.04 on the outside. Here's what happened yesterday. The facts. And only the facts. Here's an open auction out of range. Okay. We get to the 02 early before we start turning down to 95. Then we try to push the 02 and extend the initial bounce high to 03. And then we finally drop through and push to 38.87. Remember, I was looking for it to push towards the 38.90, 38.87. Back to the middle and chop until this rocket launch at the end of the day. As I said, this is my least favorite market regime. This is a time for me to not trade a lot, not churn a lot in this product. And it's just a time for me to go look elsewhere, to be honest with you. Because it's just, this run up here, you could see there are a couple things that we note yesterday. All the drops were bought. It was not able to get back into the prior range. The expectation is, since it did not, it made it through the first hour and could not pull back and fill the gap. The expectation is it is likely to extend higher at some point, and it did to 03. But when it got responsive, I was looking for a pullback continuation down, and in that situation, we're looking for 38.80 as the target. This becomes the target here, the prior point of control. And so I was looking for what does it do here, and this was quite choppy for those of you who are here during that hour, the lunch hour. It was very choppy, and it finally releases for a higher low, and then it chops around. You could see that the entire day the delta was pretty much positive, and then it finally lets off on the close. It just looked like all the dips were being bought yesterday. Very bizarre amounts of volume here at the high. As we push into this 39.08 quarter, you could see there was just an awful lot of volume. A lot was there was an iceberg there, and there was a lot that went off on the close after the cash into the pit close. I can't make heads or tails of this. This is, this kind of environment is an institutional, higher time frame type of trading environment, and we just need to be patient, obey our stops, and pick our spots and just relax. This is like trading at the end of the year. So this rip up, I didn't have a basis for it. I'm not sure what the story is, although we saw the we saw the treasuries have the same kind of move. So if we look at the other complex, the other products in the complex, you could see that yesterday the treasuries had this big pop higher. This is the 10-year note down here. They had this big pop higher, and then just kind of the pop higher represents this area down here, and then they came off, and when they came off, the indices pushed higher into the close. Just an overall bizarre kind of behavior. I can't pretend, won't pretend to know what's going on there. It just isn't my game. The prices up here are such that there's no reference because they're all-time highs. And so there's nothing to the left that we can use to measure how the market's performing against itself. So we got to let this kind of do its thing. I have very little to comment on. We let it do its thing, and then when it drops, then we have some reference points. We have some key areas to check below, like the 38.80, and so on and so forth. So that's where that stands. So far in this current session, 150,000 contracts. We appear to be staying below the mid VWAP in the overnight session. We appear to have a weak low. We have moved back into the prior day's point of control, and that's basically where we are currently, and we're holding steady. This looks a lot like yesterday's overnight session, where it's pretty tight. I believe yesterday's overnight session had 15 points of range. Today it's about 15 and a quarter, and it's more of the same. What we do observe in this auction is that the prices near highs are not being rejected. In other words, they're not being seen as so expensive that that sellers are popping in and squeezing these prices lower because they're frothy, they're too high. Essentially, the market moves up, makes new highs, then participants hug that high for a while until the selling's exhausted, and then a squeeze happens. We make new highs, we hug, so it's a flag. It's not as clean, but it's one of these formations. Just pop, hold near highs, pop, hold near highs, pop, hold near highs. Doesn't look as neat on the charts, but essentially that's what we get. We get these lower high looking things that ultimately end up breaking. So this is the regime that we're in, and it's driven by some real things, right? It's driven by fiscal stimulus and other things. So who am I to judge whether or not the market should be up here? So that's that. I don't have much more to share other than this. So we're going to dive right into the expectations for today. Here we go. Stock zones, master levels, and back. So today, being as we pushed the overnight, we pushed yesterday's high, we squeezed through. Yesterday's high, if you recall, was 3909.75, 3910. And so this was pushed overnight. We saw sellers come in. My expectation today, with the overnight inventory being about 93, 94% short, my expectation is it's an open auction that responds back. We're opening in range in value of yesterday, expecting it to respond back towards the overnight point of control. The overnight point of control is at, what is it, 3907, something like that. And then I'm expecting this to start exploring lower. I'm looking for it to make its way back to right here. You can see these multiple tests in this area. If you look at these 30-minute bars, you can see that this area has had multiple tests. There's a stock zone there. Where's my line? There are stock zones there. There's a stock zone there, but I'm looking for it to fall back towards that 38.86. So open auction, test higher, look for an opportunity for a short, look for the impulse down, push through, take out the overnight low, and squeeze into this 38.80, 687 area. That brings us to the prior week's high and in the area of the prior week's close. And then we have a high volume node from last week at 38.80. So the areas I'm interested in below are 91, the 91, and then the 88 below that. So 87, 88, expecting this area to get retested here before it decides to hold or bounce. Looking for some responsive selling today towards the prior sessions range. So that's the primary scenario given how things are set up. Secondary, open auction, pulls back, takes out the overnight low, consolidates, pushes. We're looking for an impulse up in this situation. If we get an impulse up, in other words, we have an exaggerated move up, then look for the overnight point of control and then the overnight high for the next measured move target at 18 right here, and then 24 potentially. These are measured moves. These are mathematical levels, not auction based. So those are the key plays. How this plays out, who the heck knows? Really, it's more of a scalpy type of market right now, anyway. But really, I'm really looking for it to push towards yesterday's range, last week's range, 38.88, 38.84, and 38.80. These areas here are likely to get tested from above soon. I'm expecting that to be today. Okay, hopefully that leaves you with an idea of what to look for. Good luck, and I'll catch you tomorrow morning. Take care.